Hello and welcome to the Benzinga podcast. Hello, welcome. We have another stellar installment of the Benzinga podcast for you today. We have a conversation with Jeremy Smith, the Chief Strategy Officer for SecondMarket. SecondMarket is a market for illiquid assets. Let's jump right into the conversation.
Welcome to Benzinga's podcast. This week we have Jeremy Smith, who's the Chief Strategy Officer at SecondMarket, a company that is making a market for illiquid assets. Hi, Jeremy. How are you this morning?
Doing all right, Ryan. Glad to be on the podcast.
Good to hear. Thank you very much for taking the time to talk to us. We're excited about SecondMarket, and we are very interested to hear what you have, what you can tell us about your company. Could you give our listeners a brief overview of SecondMarket?
Absolutely. SecondMarket is, as you said at the beginning, we are a centralized, transparent marketplace for the buying and selling of illiquid assets. So essentially you have the various things that are traded on exchange, equities, certain types of debt, commodities, etc. And then there's everything else. And that everything else is where SecondMarket is involved. We were founded in 2005 with one asset class that traded over SecondMarket, one illiquid asset class, namely restricted securities in public companies, so things like restricted stock, warrants, convertible debt, etc. And since then, we've launched a half a dozen other asset classes that trade over SecondMarket, one of our most recent ones being our private company stock market, where stock in sexy startups like Facebook and Benzinga and Twitter and LinkedIn actually trade over SecondMarket, even though they're not public companies yet.
Very, very good. Now, what was the genesis of the idea behind SecondMarket? What sparked Barry Silbert, your company's founder, to conceive of this company?
Barry and I worked at a investment bank, a boutique investment bank called Houlihan Lokey, Howard & Zukin. And Barry was actually working in the restructuring division at that point in time. So that's the part of the bank that took on clients and essentially helped them restructure companies that were going through bankruptcy. And so Barry was on some of the really big cases, WorldCom, Enron, and he was traveling around the world trying to help these companies dispose of assets so that they could pay their creditors. And as Barry was trying to find buyers for these variety of illiquid assets that these bankrupt companies held, he said to himself, there's got to be a better way. I have my Rolodex and I'm making the phone calls, but how come there is not a centralized marketplace where you can buy and sell these sorts of non-traditional assets? And that's when the light bulb went off, and he said, well, you know what? I should create that marketplace, and thus was born SecondMarket shortly thereafter.
Terrific. What have the growth trends at SecondMarket been like?
We've been very fortunate that they've been tremendous, you could probably say. We say it. When we were founded back in 2005, in our first year of being in business, we did about $1 million in revenue. From that point, the next year, so this is 2006, we did $2.5 million, then $5.5 million. Then in 2008, we did a little over $20 million in revenue. Last year, we did over $35 million, and this year we're on track for somewhere, $55 million or so, plus or minus. So the growth has been tremendous, and our membership base, the market participants through SecondMarket, have risen from about 2,000 2 years ago to almost 14,000 now. So we've seen a sevenfold growth in our membership base in really just a 2-year period, a year and a half.
That's absolutely staggering. I mean, the revenue numbers are incredible, and it would seem like the opportunities for growth going forward are tremendous. Do you have any, would you ever consider going public, or what strategies are you using to continue that level of growth?
It's funny you mention that, because the nice thing about SecondMarket is we have, as I mentioned before, our private company stock market, where holders of the shares of private companies can actually sell the stock and gain liquidity for themselves. And so SecondMarket is going to be its own exit path for SecondMarket, meaning we as a company, we're not planning to go public. We're not planning to get bought by anyone else. What we are going to do is list SecondMarket on our own private company stock market and give our shareholders liquidity that way. So that is really our exit path, is we are our own exit path.
Well, that makes a lot of sense, being, that you guys are the leader in making a market for illiquid assets. That, to me, makes perfect sense. Could you talk a little bit about the participants that are currently trading on SecondMarket and what their feedback has been like, and what are the requirements to participate?
So I'll start sort of backwards and work forwards. In terms of the requirements, anybody can sell. Anybody can sell their assets on SecondMarket, again, whether it's a bankruptcy claim or stock in a private company. But in order to buy, because we are a regulated entity, regulated by the SEC as well as FINRA, so there are certain rules and regulations that we have to abide by as far as who is allowed to purchase these illiquid assets. So the only people that are eligible to purchase are what are called accredited investors, qualified purchasers, or qualified institutional buyers. In other words, wealthier, more sophisticated investors. And really that kind of feature is built into the regulations to protect some of the more unsophisticated investors in getting in over their heads on some of the more complex asset classes. So, again, anyone can sell, but only the wealthier, more sophisticated investors are allowed to buy. Again, that is, by certain regulations that we're abiding by.
Right.
As far as the feedback, it's really been tremendous to this point, because if you're a seller, you have not been able to get liquidity on these assets that you hold. You've had to wait anywhere from 1 to 2 years to 8 to 12 years to get liquidity on these assets historically. So the feedback from the sellers has been tremendous, that they can now get liquidity in weeks or months instead of years. On the buy side, they've been thrilled because really a lot of the traditional asset classes, they've been overinvested in, whether you're talking about public equities or corporate debt or government debt or commodities, whatever it might be. They've really been overinvested, but what else are the buyers going to do? They've got cash, they can't put it under their mattress, so they have to invest it in those traditional investment pie slices, that everyone is aware of. So they've been thrilled with this because this has added additional slices to the pie, so to speak. If I feel I'm fully comfortable with the amount of money I put in the traditional asset classes, here are new buy opportunities that I've never had before. So really the feedback has been great there. And then lastly, addressing the first part of the question, who are the buyers? It's really a fairly even mix where, I'd say about a third of our participant base are high net worth individuals. Another third or so are hedge funds, and it's a variety of strategies, arbitrage, multi-strat, et cetera. And then the other third are the vast array of alternative investors that exist out there, from family offices to endowments to pension plans to venture capital firms or private equity firms, prop desks, just global financial institutions. That whole group makes up really the other third of our participant base.